last session of the day is going to be a joint session. We are fortunate to be joined by Nuzi Barkatally, who is the Vice President of Startup Banking, Life Sciences, and Healthcare at Silicon Valley Bank, and a colleague, AJ Fortier, who is the Vice President of Life Science and Healthcare Technology at the Silicon Valley Bank. And we're going to be talking about empowering health equity, insights on venture capital trends, founders' journeys, and investment strategies. Super relevant topic. Before we jump in, though, I would love for Nuzi and AJ to give a little bit more background about themselves. They can do it far better than I can. Nuzi, would you mind starting first, and then we'll go to AJ?
Sure. First of all, I want to say thank you for having me. We're excited to be here. Yes, as mentioned, I work on our healthcare as well as tech here at Silicon Valley Bank. My background is having been an operator at various startups, mostly healthcare startups. I also have a master's of research in healthcare and design with a focus on AI and the ethical implications of AI in healthcare. And my role at the bank, I like to say I do a lot of the fun stuff at the bank. I support founders. We provide a lot of ecosystem connections to our founders and a lot of events that can add value to what they're building and where they're going.
AJ?
Thank you, Amy. Good morning. My name is AJ Fortier. I'm the VP of our medical device and healthcare technology portfolio here at Startup Banking. I partner with Nuzi. Primarily, I focus on the client journey at the bank once you become an SVB client as a dedicated relationship manager for our early stage founders. And in collaboration with Nuzi, my main mission and purpose is to do everything I can to increase the probability of success for my clients. And that can mean, products and services. It could mean advice and strategic connections. And it could also mean partnering with Nuzi to create more opportunities to connect with key stakeholders within the ecosystem. I've been at the bank for about 4 years, serving every sector of the innovation economy, starting off at enterprise software and then moving over to lead consumer technology in LA before joining the life sciences and healthcare team. And I'm extremely privileged to be here. And thank you so much for the opportunity to speak with everyone today.
Thank you. And so, AJ, I'll ask you to continue with this question. What initiatives does the Silicon Valley Bank have to support founders from underserved communities, and who are building from those lived experiences?
That's a great question, Amy. First of all, I think personally and organizationally, we welcome founders from all walks of life. A founder is a founder, and we want to make sure that we're supporting founders across the board. But specifically for those who are, I guess, coming from underserved communities and who are building based on lived experience, we've actually built out a team internally called Catalyst 2045. And they collaborate with, some of the portfolio managers here in the company to identify these founders who are from underserved communities and provide extra support to ensure that we increase their likelihood of success, primarily because it's such a big opportunity, the problems they're tackling within their communities. And we want to make sure that they have all the resources necessary to be able to build out the value that they intend to create for these communities to ensure that we can increase health equity across the board.
That's awesome, and your focus is so critically important. Really amazing that you've got all that very focused support. Nuzi, how do you see the role of venture capital evolving within the digital health and health equity space? And what are investors looking for in these startups from that health equity perspective?
Yeah, absolutely. I mean, I think it has been evolving. I think there's definitely an understanding that health equity is important. We need to serve the needs of different communities. We need to make sure that, different communities are getting the care that they deserve. I think, when founders are looking at what they're building and if they're building within the health equity space, they should look at their goals, what are they looking to achieve, and see what investors, how that aligns to what they're building. And not every investor is going to be the right fit. But I think more recently, we've been seeing more types of VC funds that do have a focus on health equity. And some of these probably would have maybe more of an impact focus focus, or, maybe they're connected to the government in some way. So an example of that is the Acumen Fund, the Acumen organization. I think their website is acumenamerica.org. And there's another one, California Healthcare Foundation. And so both of these, they're both have such a focus on health equity and economic justice within the areas that they're investing in, and they're looking at founders who are equally building in that space, who equally want to build and scale a company, but have an important mission and impact to focus on. And so I think it's important to see the different types of funds that are coming about and to make sure you're relating to that focus with the VCs that you're talking to.
Absolutely. And I mean, obviously you just shared some key market trends and investment trends that you're seeing in some of these health equity spaces. But so you just published your latest health tech report. Are there other funding and market trends that you're seeing more broadly?
Yeah, I'm happy
Either,
to.
I mean, question to
Yeah,
either
yeah.
one.
I was going to let AJ go.
Yeah.
Yeah, I'm happy to touch on a few. Well, at a high level, we're still dealing with valuation resets more broadly, and that's across all stages, which is to be expected because of the outlier year in 2021. And now we're coming back down to earth, obviously coupled with some macroeconomic trends that we're all very aware of. However, one of the things that's really encouraging is that we've already exceeded the total investment amount from 2019 within the first 8 months of 2024. So that's a really good indicator. An even better indicator is that 42% of all of those dollars have gone to seed investments, which is great for founders in my portfolio. Obviously, hopefully many founders that are on the call, money is flowing back upstream, back into the seed stage because there's so much turmoil, I guess, for a lack of a better words, in the later stages, right? So it seems like there's more of a paradigm reset while we're trying to manage the valuation expectations with existing companies that have been funded in the later stages. Investors are looking towards brand new companies who are getting started to start, I guess, delivering capital at the beginning and building those companies based on the new expectations in the current investment environment. And so these are really great indicators that I love to see, specifically working with pre-Series A companies, just because it means that there's more opportunity now coming for early stage companies. It means that new innovations that have caught up now into 2024 that deserve to be funded have a better opportunity to be funded, and hopefully they can have the capital available to them to keep on building and to deliver value to the people that they serve.
Yeah, and I'll just add to that we are seeing more of a focus on investing in value-based care. And I think that really aligns with health equity in terms of making sure we're focusing on outcomes versus just the care that we're delivering. And I think a lot of investors are looking at not only, value-based care companies, but the technology to support the value-based care that is getting delivered and the risk-bearing contracts that, you're kind of figuring out as you go out and market. So I think all of these things are really good signs.
Yeah, and great advisement for the folks listening today. And as we close out, question to either one of you or both, what advice would you give founders building in this space looking to seek investment?
Yeah, I think, when it comes to, again, like when it comes to thinking about how you're going to build your company, what type of investment you're taking, it's really important to make sure that you are aligning with the investors that you're seeking funding from, that your mission aligns, that the trajectory of your company aligns, and being really, really strategic about, the people that you're hiring, the people that are on your advisory board, and the people that are investing in your company, because you want to make sure they're going to be, married to you for the next 10 years. They're going to be driving a lot of your decisions, and you want to make sure that those are in alignment. And I think also, especially when you are trying to move the needle within healthcare, I think you have to get creative with both the product and the service that you're delivering, but you have to also get creative with the business model. And I think to really move the needle within healthcare, we need more creative solutions on the business model side as well. And so if you really want to kind of figure out where the incentives can align, figuring out those two things together is really important. And I'll let AJ add to that as well.
Absolutely. I totally agree with everything Nuzi said. And, not much more to add there. The only thing that I guess I would close out with is to just emphasize to founders the importance that they play within this ecosystem. Everything that has been built in this ecosystem is built around the founder. And the most valuable asset the founder has is the value they create, the demonstrated value that you create. So my advice would be to continue to find harmony between your product or your service and your customers or users, and to just keep building, keep creating value, and eventually everything else will fall into place.
Well, thank you, Nuzi and AJ, so much for joining our session today. Great advisement for our listeners, and look forward to talking with you again.